We've got a smaller group today, which I actually think is going to be super helpful to get into kind of the nuts and bolts of what we're talking about today, which is the Bitcoin halving and how it is the countdown to scarcity. So I'm Jessica Levesque. I'm the executive director at C4, and today we've got two of our CBP committee members, Dawdu Amantanah and Dirk Anderson. I will let the two of you give yourselves some intros. You want to start, Dawdu?
Yes, most definitely. Hi, everyone. My name is Dawdu Amantanah. I am a part of the C4 committee, and we are here talking about the halving and Bitcoin mining.
And as Jessica said, I'm Dirk Anderson and also a member here of the CBP committee. I also sit on the CCSS, which is the Cryptocurrency Security Standard Committee. And yeah,
So
as Dawdu said, we want to talk about the halving.
yes, we
The
do.
serious halving.
So
There can be only one, right?
you've probably seen this. If you're watching this, you've probably heard Bitcoin halving, seen it. Maybe you've been around for a while and you know that this is not the first one. And you probably want to learn more about why everyone's excited about this. And so we're going to start with doing some basics to explain. We're going to walk into what the halving is. We're going to talk first about Bitcoin mining and how it is part of this process. It's the main part of the process. And we're going to kind of walk you through step by step. And if you have questions, put it in the chat and we'll see where this takes us. I'm really excited. I love talking about this. And I can kind of actually remember the first time that I heard about how mining works. And it's pretty easy for me to flash back to that moment in time. It was, I guess, 7 years ago or 8 years ago when I was first hearing about it. And I wish that I had heard about it in the way that we're going to do it today. I think it's going to be really helpful. So Dawdu, why don't you get us started by just giving us a rundown of what am I even talking about with mining? Because I'm not talking about us going down into caves. So let's get into it.
Yes, 100%. Thank you, Jessica. So I'm going to break down exactly how mining works. Dirk, feel free to chime in if you have anything insightful to say during this process. So to start off, how mining works, Bitcoin mining is not like you're mining in a cave, like Jessica said. It is the process by which new Bitcoins are introduced into circulation and the transactions are confirmed by the network. And what I mean by the network is the blockchain network. Miners use powerful computers. You might know them as ASICs or Bitmains, for example, to solve complex mathematical problems. So the first miner to solve this puzzle or this mathematical puzzle gets to add a new block to the blockchain and is rewarded with Bitcoin or with a set of Satoshis. Satoshis are denominations of Bitcoin for anyone that's not aware. The halving event, which is what this entire conversation is really based around, directly impacts mining by reducing the block reward. We'll get into that later, and making it less profitable for miners unless there's a compensatory increase or they find a way to make Bitcoin's price be more relevant for their facilities, or if they improve operational efficiencies. So Bitcoin mining is a critical process of the Bitcoin network that serves two main purposes. Adding new transactions to the blockchain, which is securing and verifying transactions, and introducing new Bitcoins into the system, thus distributing new coins into a decentralized manner. So that's a quick synopsis of exactly how Bitcoin mining works.
Yeah, exactly. And it's like you said, Dadu, it's a fundamental, it's a foundational component of of how the whole process works, right? Mining is what makes the chain of blocks actually grow, right? It keeps adding new blocks onto the chain, and those blocks are the data about all of the transactions that have occurred since the last block. So it's the process by which if I create a transaction to send you some Satoshis, right? It goes out onto this network that you mentioned, right? Which is really just a whole bunch of people participating in Bitcoin. It's a whole bunch of these computers that are all running the software to participate in the Bitcoin network, and they perform that mining function so that transaction that I sent to you gets encoded into a block, and then like you said, the first person to win the competition for solving the mathematical equation gets to put that block onto the chain and gets rewarded for it. So fundamentally, it adds several key elements to the overall Bitcoin process. One, the process of mining in Bitcoin, you probably heard this, if you've been following the industry at all, right? There's called proof of work. You'll also hear proof of stake, very common. There are some other less common methods for doing these confirmations of putting the blocks onto the chain. But the way proof of work works is what Dawdu was describing, right? Where the computers have to work in order to solve this mathematical computation. And one of the things that brings to it through game theory is basically the security of the overall network, right? Because everybody has to try and do this. And then you solve that and stick that block on the end. It becomes harder and harder and harder for somebody to ever go back and manipulate anything back in the chain, because not only would they have to go back and rewrite that block that they want to change and do the proof of work again for it, they would have to keep up with all the new blocks at the same time as everybody else is just doing that one block at the end, right? So the computational power, it's designed so that the computational power to be able to do that is very, very difficult. And after just a couple of blocks have been added to the chain, basically impossible at this point. So that's how it brings security to the network and assures that the money, the Satoshis that I sent over to Dawdu earlier stay with him, right? That I can't go back and reclaim those and spend them again or do something called double spending. So that's how everything gets recorded onto the network.
One of the things that I think is interesting is this idea, the mathematical computation and the comparison to a Sudoku puzzle, and how, you think of one person doing a Sudoku puzzle, and then you think if the three of us are doing it together, and then you think our computers are doing it, and on, and how complex these mathematical problems are. So I think about how long it takes me to just do a regular Sudoku puzzle, and how if you guys were helping me, it would be much quicker. But then if my computer is helping me, it'd be even quicker, and how it kind of compounds. And when we talk about the proof of work, all of this work comes together to be able to solve these problems. And if we were a team of computers solving this problem, and there was another team of computers solving the same problem, we're competing against each other to solve that problem first. But the key here then is we're comparing to make sure everybody else got the same answers. So many people, many computers are doing the same work to then be able to come to a consensus agreement that the work done was correct. But the computers, the mining pool or the miner that solves this problem first is the one that gets the reward, which we're going to get into, but they're the one that completed the work first. So it is a race. It's kind of like a math race, which in real life is my worst nightmare, because math is in general, but then having to race to compete. But thank God we've got computers to do this for us, right? The way I just explained that, anything to add or kind of shape in terms of how I said it, that would be helpful?
I can add one more piece to expound on that, Jessica. So when you mentioned proof of work, everything you said was definitely spot on, but there's also a process within that called difficulty adjustment, where the difficulty of the mathematical puzzle adjusts every 2 weeks or so, and that allows the network to maintain a consistent rate of block creation. So when I mean block creation, every block is being created for a 10-minute interval. So that's what keeps the system decentralized. That's what keeps it secure. And I just wanted to add in that part, because a lot of people, when they talk about proof of work, they sometimes forget to talk about the difficulty adjustment, which kind of keeps the network cohesive and kosher, so that there's no way for someone to kind of overtake the network or become greedy or use a set of miners to gobble up as much Bitcoin as possible. When we have a higher traffic on the network, the difficulty adjustment also increases to make solving that puzzle more difficult as well.
I think that's a great point. And as you were saying that, I thought anything that has to do with difficulty in math, it makes sense why I would try to avoid. My brain automatically is like, no, don't talk about difficulty with math. But can we explain a little further about difficulty and the hash rate, and how this works to how does it shift, and how is it set up so that it remains every 10 minutes? Because I remember when I first heard about this, I was like, this must be really well designed, because how is it still doing this after however many years?
Yes.
Yeah, I think
Oh,
that's
go ahead,
right.
Dirk.
And I'll go back to just a second though. That's one of those things that would literally, you know, having a spouse, sometimes occasionally she asks me about like Bitcoin, not very often, but every once in a while she asks me something about Bitcoin. And of course, she's been hearing about the halving. And so we got into kind of a conversation about mining. And one of her comments actually was, so that was all planned. Like adjusting that was all that was all part of the plan. And it is, right? It was an inspired understanding of the game theory that's going to keep all of this secure, right? And the idea that as more computers get added to the network, right? Things are going to get solved faster. As processors increase in speed, things are going to get solved faster. And you don't want, like Dawdu was saying, anybody to be able to take control of the network by just suddenly having, more powerful computers or more of them than the guy next to them. And so the solution to that is to change the complexity of the equation. And it can actually go both ways, right? If the network shrinks and it's taking longer than 10 minutes to process a transaction or process a block, you can actually reduce the complexity as well in order to maintain that steady addition of the blocks to the chain.
Yeah,
100%.
and the Bitcoin white paper is behind Dirk. And this is the original explanation of how Bitcoin works. And so to kind of go to your point of this was not just recently added, this was planned. I just pulled up the Bitcoin white paper on my computer, and it says to compensate for increasing hardware speed and varying interest in running nodes over time. The proof of work difficulty is determined by a moving average targeting an average number of blocks per hour. If they're generated too fast, the difficulty increases. So when you think about Satoshi Nakamoto, the pseudonymous individual who created Bitcoin,
Who is
and
not Craig Wright,
it was um, and agreed.
according to the UK courts. That goes on.
Agreed. If you think about the pseudonymous individual, Satoshi Nakamoto, who created Bitcoin and all of the things that led up to this, and then you look back at the paper, it's kind of mind-blowing to see that all of these things were considered. So the idea of needing to increase and decrease this difficulty rate was built into it. And that white paper that's sitting behind Dirk right now, that white paper is still how it works. For technology to have worked this long, this well, and to have all of these things built into it is just incredible. Okay, now I'm doing the thing where I'm just like, Bitcoin's the best, and I'm just going to evangelize it. All right, let's get back
That's
to
why
it.
I keep it there, though, right? It's 9 pages long, and the last page is just footnotes, right? Or references. It's the simplicity and elegance of the design, and yet the foresight to address these things is what I think makes it from a, I got into this as a technologist, not from a financial perspective, right? I'm a computer geek, an information security guy. I've done applied cryptography for years. That's my fascination with Bitcoin initially, right? And then I had to learn when I got into Bitcoin as an industry, I had to learn an awful lot about money and the history of money and monetary theory and finance and all these things that I knew nothing about. That wasn't because that wasn't what brought me into it in the first place. It was the beauty of somebody applying these things to that in such a simple and elegant way. So part of that simple elegance stems around the rewards that Dadu mentioned initially, right? That are provided to the miners. So when somebody is mining, they win that Sudoku competition, they get to add a block onto the chain, and they get some Bitcoin as a reward for solving that puzzle. When Bitcoin first started, they would get 50 Bitcoin. But one of the things that Dadu, maybe you can talk a little bit about is this notion of scarcity that's built into Bitcoin, and maybe kind of why that was part of the original design.
Yeah, 100%. So when you're talking about scarcity, you know, Bitcoin has, 21 million supply. And as we're aware, like when you look at the ETFs, you look at supply shock, you're going to see as time goes on that people have this high demand for Bitcoin. and there's only so many Bitcoin that can be produced each day. And a supply shock occurs when there's a sudden increase or decrease in supply, significantly impacting the price. That's why you're seeing these massive swings. You're seeing all-time highs, and then you're seeing 10 to 15% drops. The halving increases the rate at which these new Bitcoin are created. So this potentially is going to lead to a supply shock, because with only 21 million coins available, and I think as of right now, there's around 19 million or so that have already been kind of pushed out onto the network. So there's only a few million left, and everyone is fighting and battling to try to get as many Bitcoin as they can. And the halving is only going to make that more important or more stressed. So to answer your question, Dirk, the scarcity issue that we're seeing with Bitcoin right now is something that's only going to get worse. Every 4 years, we have a halving, or halvening as people call it, and that's only going to make more supply shock, more increase for demand, and also making Bitcoin more scarce, more valuable, and stronger as a sovereign asset.
Yeah.
And
Oh,
can
go
we
ahead.
real quick compare this to fiat?
Well,
So
that's what, yeah, exactly.
go
Go ahead.
for it. I'd love to
No, I
hear.
was just gonna say I think what we have to remember, so two things, right? One, I think when people hear there's only ever going to be 21 million Bitcoin, sometimes they're like, well, then it's too late for me to be involved, right? Part of the beauty of a digital asset is it's infinitely divisible, right? And so the um the the point that Dottie is making, right, is that as each Bitcoin becomes more valuable, then the facets of it become more valuable, right? The Satoshis that make it up become more valuable as well, right? So it's not like, that you suddenly don't have enough Bitcoin to spend anymore, or somebody can't do anything with them anymore, right? Because they're gone. And I think that what's really important to what you were saying, Jessica, is that you have to remember that this came out of 2008, right? This came out of a massive financial, like global financial crash, right? From the banking industry. And that was the whole reason that Satoshi did this. And we've just been through this after the 2020 and the impact of COVID on the world and everything again, where traditionally what happens is a central bank or a government just says, hey, we need more money, and they go print some more money, right? And that's what creates inflation. As when you can just throw more money into the market, you get inflation, because now there there's more money floating around out there to buy the things, so people have to increase the value of the things that they're trying to sell. The whole purpose of the limit in Bitcoin was to make it anti-inflationary, to make it so that in fact over time, and like Dadu said, right, we're still at a point in Bitcoin's history where we see volatility all over the place, but the point was over time to make it just go up. Right, because as Dadu was explaining, as the demand goes up, you have these ETFs now that are trying to buy in large volumes, and so they're trying to like buy up a bunch of Bitcoin, and as those things happen, the demand goes up, but nobody can just print more Bitcoin, right? The Bitcoin comes out at this steady rate, as defined by the protocol, and that's what I think brings us right up to the exact moment of the halving and the impact of that, Dadu, right?
Yep. And Dirk, I
Can I
wanted
jump
to,
in real quick before we get into that? This is something that I've noticed. I'm sure we've all noticed with inflation, and at least, the three of us are in the United States. The cost of food has dramatically gone up, and the United States government continues to, digitally print money. And so the supply of money keeps going up. And one of my favorite memes or jokes is from Arrested Development. If you've ever seen that show, there's this part where this woman who's super out of touch with money goes, what can a banana cost? $10. And I've always sent this meme. This is like, I don't know, 15 years old or 20-year-old joke. And I was realizing, oh my God, at some point, that's not going to be funny anymore, because a banana is going to be $10 because of this route that we're going. And I know that obviously traditional finance and using US dollars is not going to, go away anytime soon. We're going to continue going to the grocery store, and at least for most of us, they don't accept Bitcoin yet, so we're still using this USD. But we're seeing every time we go to purchase something, how this increase in the supply and just this printing of money is really impacting us. on a day-to-day basis. And so when you compare that to the opposite of, well, maybe it's not exactly the opposite, but the way Bitcoin works with this supply that cannot change. It's mathematically impossible to just suddenly have me be like, you know what, I'm the president and I'm going to do this. And now we all have, 50 million Bitcoin available. That 21 million supply cap it's the cap. And so we've got that. And I just think that it's, as a comparison, is really interesting and it's so different. And so I think sometimes people have a hard time wrapping their mind around it because we're so used to just being able to make more of something and to not be able to do that. And when we say scarcity, we really mean it's going to become more and more scarce. And like you said, Dawdu, over 19 million or around there has already been issued. And so, yeah, sorry, I find it fascinating how it ties into our everyday life and that comparison.
Yes, and I just had a quick rebuttal for both Dirk and you, Jessica. You guys mentioned some really important things, and there's a famous quote from Andreas Antonopoulos where he says that this is not your grandparents' money, this is programmable money. And I just want to make it clear for the audience that this scarcity is a fundamental aspect of Bitcoin's design. And Dirk can speak to this more closely, but this is closely tied to value proposition as a digital asset. And the scarcity is programmed into the Bitcoin protocol and is primarily achieved through two mechanisms, which is what we've been talking about throughout this live, which is the cap supply and the halving event. So I just wanted to kind of add that tidbit in there that, this is a feature, not a bug of this scarcity and cap supply that we're talking about.
Yeah,
Yeah.
no, exactly. And it's why when people are, it's actually the answer to the reason when people are like, well, why is Bitcoin worth more, right? Why does it go up in value, right? That's the answer to the question, is because by design it's intended to, right? Through this manufactured scarcity. Yeah.
And I do think when we say, I mean, the network will always be called Bitcoin, but right now we talk about it like how much of a Bitcoin. But eventually, to your point earlier, Dirk, we will be talking about Satoshis in that way, or Finnies or whatever as we go down, to make sure that actually Finnies are Ethereum, aren't they? Ether? I'm blanking.
Yeah.
But either way, we'll be using the divisible different numbers, or different names, just like when we talk about, nickels, dimes, whatever the divisible names are for whatever currency we currently use through, fiat. So it's not like once the 21 million are issued that it's the end. That's not how it works. And so maybe we could talk a little bit about transaction fees and so we've talked about how that Bitcoin is issued through the winner of the Sudoku puzzle, but what will happen when there isn't any issued?
So before we do that, which is exactly where we need to go, I think it's worth mentioning that one of the things about Bitcoin that's basically unique is this cap as well, right? When you look at all of those other cryptocurrencies that have been created out there, right? Bitcoin was designed to be anti-inflationary money because of when it was created and the economic environment that spurred the design of it in the first place, versus say something like Ethereum, which was never meant to be money in the first place, right? It's supposed to be distributed consensus computing, right? It was basically a computing platform for running programs, and the Ethereum coin was just to pay for your computing, right? In theory. So this is not something that you like. If you just look at all the other cryptocurrencies that are out there, they don't all have this built into them. They're not all like this. This is a unique, or at least mostly unique, as far as I know, element of the Bitcoin network to have that cap.
Yeah, and like you said, Dadu, it's a feature, not a bug. I feel like that's
Yeah.
such an important thing for people that are maybe unfamiliar with how this works, to see that yeah, it's been planned and it's working, it's good.
So to go back to your comment there, question there, Jessica, right? So we've talked a lot about mining and how mining works, and we're about halfway through our show, so we should probably get to the halving. So miners, they get that blockchain reward, They also get paid fees, right? So every transaction has fees associated with it, and the fees on the network can fluctuate depending on demand. Um, Eventually, the idea is that you have a large network. The value of the Bitcoin itself has grown so much that those fees are plenty to keep a business rolling, right? That was kind of the idea. Like there's a two-factor thing here, right? The mining reward both introduces new Bitcoin into the network, but also gets us through the growth process where it's profitable, keeping it profitable for the miners to participate in the network until such a time as it's profitable to them to participate in the network just because of the network itself. Um, and so that's where we come back to the halving, right? And so every roughly 2,000 blocks that get added to that chain, by design, the amount of that reward gets cut in half. So it was originally 50, like I mentioned. In 2012, it went to 25. In 2020, it went to 12 and a half, which is where we are right now today. And coming up here in April, we'll be having that next halving event, and that blockchain reward will be getting cut to 3.12. No, we're at 6, right? We already have it. Yeah, sorry, I missed one. There have been 3, and so it'll be getting cut to 3.125 new Bitcoin being mined for each one of those blocks that gets added onto there. So that's where we are right now. You want to talk a little bit, Dawdu, or Jessica, about the impact of that on mining, and again, maybe how that affects the scarcity over
Real
time.
quick, and I'll let Dawdu answer that. I just want to say that when we were talking before about the miners, whoever wins the Sudoku puzzle that gets the reward, it used to be at first 50 Bitcoins.
Right,
It has halved, and
right. It was a 50,
now,
25, 12 and a half,
2.5,
6.25, and it'll be going to 3.125.
2.5. So currently it's 6.25. And so that is the number right now. And then once it happens, it happens, it then will be 3.125. And like we said, that is written in, and that is the reward that these Sudoku player winners get. So Dawdu, take it away. I just want to re-clarify that.
And that'll be coming up mid-April sometime, right? We're looking at around, I think, the 16th, 17th, right? For when that block will be
Being
mined.
pushed back, which is
Yeah.
interesting. So sorry, go ahead, Dawdu.
Yeah, it's doing like weird things. Like some people are saying April, some people are saying May. But to answer the question, so the halving and the impact, right? So the Bitcoin halving is, of course, an event that occurs every 4 years, and that halving is a reward to the miners to receive, what they receive for adding new blocks to the blockchain. And this mechanism, like I mentioned earlier, is built into Bitcoin's code to control inflation and also mimic the scarcity of precious metals. I know a lot of people in the space talk about Bitcoin taking over gold or surpassing gold in market cap. And when you look at the halving, you look at the scarcity aspects of Bitcoin, you see a lot of similarities to the precious metals market for people that are not in the know. The impact of the halving also increases the scarcity of new Bitcoin, like I mentioned before. And these potential price increases are what we call supply and demand dynamics. So the miners, their main role in this whole entire halving or scarcity aspect is to create you know, what's the word I'm looking for? You could say the miners are in control of Bitcoin supply, but they're also keeping the network secure. So this is going to cause an issue where you're going to have reduced profitability if you're not keeping up with the scarcity aspect. So like Dirk said, we have 6.25 Bitcoin coming out. After the halving, we'll have around 3.125 or so. And this is expected to occur sometime in April or May. And the impact of that is that you're going to see the ETFs. We always go back to the ETFs because they're buying it at such a rapacious rate, expeditiously, that when people go to buy Bitcoin on exchanges or they go to look for Bitcoin that's being sold on the market, as soon as that Bitcoin is sold, someone is more than likely going to end up buying it, whether it's BlackRock or Fidelity. So the halving is very important for people to be aware of, especially if you're getting into Bitcoin as an investment or an asset. And the impact of that is that every 4 years, no matter how much Bitcoin you buy, it's always going to be less and less. So you need to be aware of that when you're purchasing Bitcoin.
And this is the point, I think, in the show where we mentioned that this is not financial advice and we're not financial
Yes.
advisors. We're talking about like the history of what's happened and the modeling around it. So yeah, I mean, that's the thing, right? So this is where we really get into the impact, I think, of the halving. And I can't actually think that we didn't mention at the beginning of the show, right? The whole reason it's called mining is because it has more in common with that idea of like mining a precious metal like gold or silver or something out of the ground, right? And the fact that there is only a limited amount of that out in the ground to go mine in the first place, right? So it has much more in common with that modally than it does with the fiat that we talked about. You know, somebody can just make a decision to print more, right? So that's why it's called mining in the first place. And so, yeah, I think this is where it gets really interesting, right? There's traditionally, um, Bitcoin kind of follows a cycle over every roughly 4 years around the halving events. Um, and what we tend to see is right after a halving, there's usually kind of a drawback because all of a sudden the number of Bitcoin being mined into the market is less, which means there's less profitability for those miners. And what a lot of those miners do is they sell some of the Bitcoin they've been sitting on and holding into the market, right? Which then creates more supply. Then the demand drops the price down, and then it'll slowly build back up because again, the whole point of the architecture is that it becomes more valuable over time in order to compensate for the fact that there's a limited number of them. And so this year has been a little bit different because of the timing of the ETF approvals being right at the beginning of the year here and just spiking the demand for Bitcoin beyond what's available out there today, right? And so it's going to be really interesting, I think, to see how this plays out as we go into the post-halving part of the curve here and how that is the same or not to past years.
One of the things I wanted to talk about, and we addressed this in quite a bit of detail in our Certified Bitcoin Professional prep book and our CBP course, but there are many different properties, functions of money, how something actually works as a type of money. And one of the things that's important is that there is a limited supply of something, because if everyone can have everything, then there is no value to it. And there's in the book and course, we talk about how seashells could be formerly used as a type of exchange. You're exchanging something for seashells to be able to keep track of it, but that wouldn't work if you lived on the beach. You need to be inland for it to be something that's scarce. So when we talk about why Bitcoin kind of works and why this is a function of money, it is again interesting to compare it to fiat, where that is, like we're saying, one of the main important pieces of money is that it can't just exist in whatever multitude we want, but that is something that we deal with fiat. And so these different pieces of what we're talking about are included in our study materials if you want to understand it on a deeper level and like from a wider perspective and how it all ties together and how this idea of scarcity really does impact economics and our economy in general. And yeah, so sorry if that was like a little out of it, but I don't think we addressed the fact that like everything we're talking about, we go into more detail in our prep materials and tie these things in together to the bigger picture as well.
Right. Yeah, we tend to just pick a topic for these live streams that are only one of many of the topics that make Bitcoin and crypto in general and zoom in on them. I think maybe Dawdu, maybe you could talk a little bit about, so as we're digging deeper into the actual halving event and stuff, the economics of mining, right? And why this matters and why miners will sell some of the Bitcoin they might have been sitting on afterwards and just how that the economics of that mining plays out.
100%. And this kind of ties into the transaction fees a little bit as well, Dirk. So on the economic front, like the incentive for miners are they're incentivized to include transactions with higher fees into the blocks they mine because they get to keep these fees as a part of their reward in addition to the block reward, right? So on an economic scale, or if you're running a mining business, you're always looking at that incentive for the miners and the block space limitation, which is something that, you know, we could fall down a rabbit hole and talk about the block size wars and stuff like that. But since a block has this finite space, the capacity I think is capped at, I think 1 MB or something like that. Sorry for being super nerdy, but I think it's 1 MB that there's a cap for each block for the blockchain on SegWit. And essentially this limitation creates a competitive market for the block space. So every miner is fighting to try to get more Bitcoin. Don't quote me on the numbers, but I want to say on the ETF side of things, I want to say the ETFs are buying like 900 Bitcoin a day. And if you think about the price squeeze, the limitations of how much Bitcoin can be produced by the miners on an economic scale versus what the demand is from investors or people trying to buy the ETF shares, you're looking at this massive amount of money coming in, but a limited amount of supply going out. And I think on the economic front, that's what's really causing these huge price swings, spikes and increases, all-time highs, and what's getting people really interested in looking at market-based pricing and how they can get into the Bitcoin network.
Right. I mean, there's roughly 144 10-minute blocks in a day, right? In a 24-hour day. So that's, if you're getting 6 Bitcoin per every 10-minute block added to the environment, that's the max. That's how many are available for anyone to buy in that day, right? When that goes down to 3, then that's now the new number, right? That is available for anyone to buy. And so I think, again, we talked a little bit about this a couple of shows ago, I think, which is one of the things that you always hear about is, how Bitcoin is destroying the planet by its energy use, right? I think that we've talked a little bit about already about why the proof of work is so important, right? It's what provides the security and stability of the network, right? And there are other ways to address that. Like I said, proof of stake being the largest other big one, but there you have to address an awful lot of things when you go to proof of stake, right? In order to keep the same level of security that you just have inherently with proof of work. And so, as this goes down, right, there's all these miners, right, and these mining rigs out there, and there will literally be on the day of the halving, there will be mining rigs that become unprofitable to operate, right? They were profitable as long as every time they mined a block, they would get the 6.25 Bitcoin a reward, but they become unprofitable when that gets cut in half, right? They're no longer making a profit, and so those old rigs will, get pulled out of use. There are miners who, look at the halving and decide whether to stay in business after each halving, right? Which is why what we talked about before on one of the previous show and energy, right? Miners are chasing the cheapest possible energy they can find, right? They are using the energy that isn't going to get used otherwise because they want to pay the smallest price for it because that's the only way that they stay profitable. Again, as the value of Bitcoin goes up over time, which means that the value of the fees being charged on Bitcoin go up over time, right? To offset that. But there's this migration process that we go through with each halving where the cost of mining the Bitcoin no longer keeps up with the value of the Bitcoin being mined.
Yeah, and when we talk about, and what's coming soon and the having and how cheaper energy is going to be something people are looking for, what does that look like? Like how, I know we addressed this in a different live stream a little bit, but how does one go look for cheaper energy, or how does this actually play out in the real world? Because I feel like when we hear it, it's like, okay, I get the concept of it, but can one of you talk about what is that actually looking like for miners? Are we going to be losing miners? Are people still going to mine? Because when you say it, it can kind of seem scary. But why do those of us on this call feel confident that this is not actually going to be a problem for the network as a whole?
Jessica, I can take a crack at this. So, why the energy costs matter is a topic that a lot of people talk about. They're always concerned about the environmental issues of Bitcoin. And there's a few aspects, right? When you look at profitability or you look at competitive advantage, the lower the cost of electricity, the higher the potential profit margin is for miners. And the Bitcoin halving is what we're talking about, kind of reduces those block rewards, but it also gives access to cheap energy, and it becomes more critical to maintain that profitability. So miners with access to cheaper energy sources can afford to mine Bitcoin at a lower cost. That just makes sense, giving them a competitive advantage over others with higher energy costs. Like when you look at places like Texas or Riot Mining, Texas has its own grid. They're using, different ways of getting cheap energy, such as hydroelectric power, geothermal or wind energy, stranded or flared natural gas. And these aspects are all things that a lot of the environmentalists or climate change people are kind of battling with, because they're trying to figure out, if they're using hydroelectric, is this giving off CO2? Is this causing the greenhouse effect? And I think a lot of Bitcoin miners and companies are looking for those sources of cheap energy, and they're trying to do it in the most green and efficient way possible. But there's a lot of like environmental and regulatory considerations that we have to think about, such as the environmental impact. When you're talking about Bitcoin mining, there's regions where they're using coal or fossil fuels to produce electricity, and that has drawn some criticism. But the carbon footprint of mining operations is always the concern. But when you look at a lot of these new facilities that are coming out, they're doing things really by the book. They're trying to be as clean and environmentally sound as possible. And that also breeds innovation, right? So when you look at a miner that is growing in a trend towards creating solutions to be more green, you're seeing more renewable energy things coming out of the space. And you're also seeing the efficiency of ways to capture that wasted energy and turn that back into the mining operations to mine more Bitcoin.
Yeah, exactly. And it's the mining costs directly themselves, right, come into play here. So like you said, people using stranded energy, right? That's the energy that is just going to be burned off at like natural gas wells and that sort of thing, the flaring that you mentioned, where they're pulling more out than they can actually pump or use, right? And so it just gets wasted. You have wasted electricity all over the grid, right? Because even with the massive advancements in battery storage over the last couple of decades, driven a lot by electronic vehicles, we still can't store the kind of quantities of electricity that someday hopefully we'll be able to store that when we generate them. So you have a big wind farm suddenly start generating way more electricity than is needed in the grid where it sits at that time. And that energy just goes nowhere, right? It doesn't get used. And so you see a lot of miners, right, have become very mobile, or they've built right next to the electrical generation so that they can take advantage of that at very cheap rates. But it's not even just that. There's ancillary costs, right? And everybody knows that when you have a big room full of computers, they generate heat, right? And so you see miners looking for places that are operating in places that are colder as well, right? So places like Iceland and stuff like that, where they can get some natural cooling without having to pay for the electricity to cool off the systems as well. And so there's kind of ancillary costs that go alongside of that as well. And the point being that as the mining rewards become, this is where we kind of come back to the whole design of the economics of the system, right? As the mining rewards become less valuable, right? And there's more reliance on the transaction fees, and the Bitcoin itself becomes less available, more scarce as people are demanding it, the overall price of the ecosystem just has to go up in order to sustain that.
Mm-hmm. Yeah, I'm gonna put a video in the chat that talks more about the energy situation and how what you're talking about, you can pull from different places and energy that's just being wasted. And there's a really good video by Andreas Antonopoulos, who's one of our board members, where he talks about this, and there's some graphics that show exactly what it looks like. I also think that people who don't see the value in how Bitcoin works, it's likely because they wouldn't benefit from it in the same way that they see those of us. They might be part of traditional finance in a different way, and so they don't see how it can impact them, and therefore they're the ones that are likely the naysayers and just talking about the energy from Bitcoin, but you don't often hear them talking about the opposite, which is I doubt the armored trucks driving around with money are, Teslas. Pretty sure they're not. And so we can always pick whatever we want to focus on to look at the negative energy side of it, or we can look at, the positives of it and say this is something that's being used for good, and there are ways to get around the energy problems. But I personally don't have a private jet that I'm using for my transportation to and from my house. I know that's a wild thing to say, but so maybe it is okay that I'm using Bitcoin instead because I'm cutting energy elsewhere. I don't know. I think it's just easy to make this blanket statement that Bitcoin is bad for the environment. And that's BS, that if you look at from that one perspective. And I'm going to get off my soapbox, but I could ramble if anyone wants to rant
There's
now.
another really good video too, is the one by Tyler from the Bitcoin Training Conference, where he did the entire presentation specifically on how the energy use calculations are done and manipulated, and that was a really good video that I think is still out there as well. So it's a few years old at this point, and there's been a lot of advancement just in where people are getting their energy for mining, but it was a good presentation around the fundamentals. So
Yeah, I'll look for that too. And the training conference Dirk is talking about is one that C4 did a few years ago in Denver, where we had a bunch of teachers come and talk about things. And I actually went to that one. It was really interesting. So we can post about that as well.
yeah.
All right. So did we talk about, I think Dawdu, you mentioned supply shock and ETFs already. Was there anything else we had wanted to say about that, or did we cover that entirely?
No, I think we covered it for the most
Okay.
part.
Okay, cool. What else did we want to talk about with the halving? Is there anything that we've missed or we want to explain in another way that we think? And if you've got questions, please ask them in the chat and we'd be happy to answer those as well.
I think it might be worth just taking a minute here, because we've been kind of all over the place and gone deeper into some areas, right? To just kind of come back to the, kind of in summary, the fundamentals, right? Mining is this core process, this fundamental process that is what makes Bitcoin work and keeps the network secure. Miners get rewarded for participating in that process. And because Bitcoin has a capped total limit of available Bitcoin that will ever exist, the way that those Bitcoin get created through the mining process has to be reduced over time in order to eventually get down to none are actually being generated anymore. We have the 21 million. And it's a little bit like Zeno's arrow in philosophy, right? It's always the halfway there thing. So it's just going to be a smaller and smaller and smaller amount until it's less than, the standard divisible amount that we're measuring. But that will happen over time. And what's coming up here with the halving is one of those moments where we cut the amount in half, and there's impact of that both on the mining community as well as the financial aspects of Bitcoin in general. So, did I miss anything there? Just kind of trying to re-summarize all that.
No, I really like that. And actually, something that I know as an educator is explaining something in multiple ways, multiple times is the best way for people to understand this. So actually, Dawdu, I would love if you would also do a summary of this. And I think just your words will be slightly different, even though you'll be saying the same thing, and it'll reinforce what we've been talking about. Would you mind? I just think that would be helpful, and we can release it like as a clip later for a short explanation of what you guys said.
Most definitely. So to give a summary on exactly, what this whole entire event is about is you're looking at the halving, which encapsulates how Bitcoin mining works, the role of the miners, the mining process, the environmental concerns, and the significance of mining when that halving is impacted and how that impacts the markets, such as like Bitcoin ETFs, for example. So The halving event is every 4 years, or roughly, after a certain amount of blocks are actually put into the network, which increases scarcity. Also, you have the Bitcoin ETFs that are in play now. And I have to mention this just because this is kind of like a new phenomenon that's coming into this halving space that we haven't seen in previous ones, where the Bitcoin ETFs are offering this exposure to Bitcoin without the need to directly purchase or hold the cryptocurrency, which is making things look different for this halving and for this mining process than other events in the past. And this halving event will significantly impact the way that Bitcoin ETFs, primarily through the efforts of Bitcoin price, is going to look. So like Dirk said, like Jessica said, this halving event is completely different. Hopefully, after, the halving, we'll see more of an increase in the Bitcoin, price. We'll see more people trying to buy into the asset. But this whole entire live was kind of to educate the masses, educate the audience on exactly what happens every 4 years with Bitcoin and the reward that the miners receive for adding new blocks to the blockchain when it's cut in half. So feel free to look into C4's information. Feel free to go back to this live and really dig into exactly the concepts that Dirk, Jessica, and myself have actually given in this live. And I think that it'll be really helpful for people that are curious about the halving, the impact, and also the role that Bitcoin miners play in this decision.
Absolutely. And when somebody asks you, someone from the audience, what the halving is, you can simply say, oh, it's something that happens every 4 years where the blocks are reduced by 50% and it increases scarcity. And this is the 4th time that it's happened, and it'll keep going until the 21 million Bitcoin supply cap occurs. And it's going to likely increase value, but definitely increase scarcity.
Yes.
So I think it's always helpful when we can explain things in our own words to other people. It makes it seem much more accessible. So if you've got people, as the price goes up, if you're into Bitcoin, I'm sure you're getting people who have thought you were maybe kind of crazy for being into this, suddenly coming out of the woodwork and saying, hey, you still into that Bitcoin thing? And then, naturally, when the price goes down, people are like, are you okay? Are you still doing this? And so it kind of goes up and down with the price. But I think it's helpful when those of us who really believe in it are able to explain why we believe in it and where our passion with it lies. And so in particular, so that the focus isn't just on the price, but also on what an incredible protocol it is and all of the things that come along with it that have guided those of us who have been into it for many, many years to where we're at today, where we want to spend our time chit-chatting about how awesome it is. I think it's pretty cool.
And go back 1 or 2 episodes where we talk about like practical uses of it and the what we call the real value of it in the world, not just the price, right? But what it brings to the financial world for people.
Mm-hmm. It's an incredible technology. And I'm very grateful to both of you for spending your time today to talk about this. For those who don't know, our committees are all volunteers. And so it's just people who really understand how cryptocurrency, and in this case, Bitcoin works. And our CBP committee comes together to work on the CBP exam, our study materials, to provide free content. And they all do it because they really believe in this technology and they believe in what C4 is doing. And so they show up and talk about the things that we think you all would be interested in learning more. So thank you, Dawdu and Dirk, for being here and sharing your knowledge. And we will be back for our next stream talking about the Lightning Network. And we'll keep you posted on when that is, but I'm excited to talk more about it because we haven't done that much on Lightning. And I think that it is going to be something a lot of people are excited to learn more about.
Because right now, some people are like, wait, what's Lightning?
Mm-hmm. Yes.
And you didn't even say layer 2 networks to just confuse them even further. So
good. I'm glad I'm ending this
again.
on a confusing note. That's always helpful. But yeah, we'll get into that next time. And thank you both so much for being here, and take care.